All right, so welcome to the exchange. So, first and foremost, I'm not a financial advisor. I'm just here to give you my opinion on what I see in the stock markets. Looking to the left to see what has happened, then looking to the right to see what may happen. Do your own due diligence. Make sure you invest money in things you know about. If you don't know, invest in yourself and learn. That's the best way you can make money out here and have some security in these markets. So, let's look at what happens to stock markets so we can get a better idea and some security in exchange. Welcome to the Exchange Show.
All right, welcome to an episode of The Exchange, and we're talking about bioscience this week. And we're going to have three stocks I want to talk about. Two are going to be in the medical field or bioscience, and one is you probably heard of it, but didn't really think about it. So let's take a look. Um, First and foremost, here is Pacific Biosciences. This was big in the news a while ago, and at this time, it's in the toilet. It's completely in the toilet. It's a turd, and nobody really wants to touch it. You can see why, because it's at $1.03. But we are in a trend, and one of the lowest areas it could have gone to was this $1.06 area. We're a little bit below that, and if you notice, we have some divergence going on here. This is something I will add to my watch list to see if this could take off because it does have the potential to go up. Let's say if you're like, I'm unsure where, just aim for the 200-day moving average. That's $8.76. You also have the next structure, which is above it at 1064. Then the next structure is around 1461. Is it could be something you look at if you see a price point you're interested in. Say it breaks to $2.70. Let's see, two, yeah, 273. It breaks 273 and you're interested, it does have potential to go up, but it's going to be based on news. So the reason that Pacific Biosciences was big is they're into gene sequencing with DNA. So great for them. Just because we don't have like a steady thing with healthcare right now, though, it's just a little bit down. A lot of healthcare stocks are down at the moment. They may be starting to wake up, and you got to remember money is looking for places to go at this moment. When where there's uncertainty, there's like I want to go here, I want to go there. So there's sectors that are starting to get some activity. Now there's another one here called Iovance. All right, so I covered this one before. Now this one is getting pretty low. All right, now the lowest I would look for it to get is 99 cents and change. Now the only reason I'm covering this is because this one looks like it is pretty prime to start waking up. Like the last time it really took a dump was in June of 24. That's like a year ago. The strength of the market has been down, but never as low as last year in 24. If this continues to go down, it will hit this 90 cent area. For me, maybe I'm looking at this just to see how bad it's going to get, but it has gaps above it. I have an earnings price here of 320. That could be a target. Another earnings price up here at 525. They both coincide with gaps that are under them, and the 200-day moving average is at $7.12. With that being said, this is a crap stock. Let's just be honest. This isn't something you buy or hold. I'm not giving you anything to buy or hold. These are like swing trades where you get some good profit and you get out. Uh, Now, the last one, this is going to depend on news. This is like specifically going to depend on news. And Iovance works with cancer drugs. So if you hear anything about cancer drugs getting new funding or contracts, you're probably going to see a bounce in this. So our last one we're going to cover is going to be about housing, and it's Fannie Mae. So Fannie Mae is at $6.78. What that means is, you may not know, but I'm going to tell you. If the Fannie Mae and Ginnie Mae, if they can come out of government conservatorship and go back to being private again, because this is a OTC, this is an over the counter. All right, so be wary of that. It can go up and then go right back down. Like it's been going up since late last year, from November of last year. Let's put this in the weekly, and I'm going to tell you why I'm covering it. because at one point when these were private, now remember when these were private, the last time was in 2007, 2008 area. So yeah, October '07. This is around when they were private. After the housing crash of '08, they were under government conservatorship. And we've had like a couple of bounces up, and this is like one of the higher ones since it went under conservatorship. If you hear that the government wants to take Fannie Mae or Ginnie Mae out of conservatorship, you can see a very big push. And when I say a big push, remember the last big structure was at $68. We have some consolidation around the area of $40 and another area of $18. But you're at $6.78 right now. The highest it's been up here, $89. Okay. $89 has been the high. Now, let's be honest. If this comes out of conservatorship, you get news that the housing authority is getting this out and it's private again. Let's look at here. It's off. It's gone. I'm looking at it, but I also want to get a good entry. All right. I want a good entry. I would like to see it come back to this trend line for an entry. But I'll be honest with you, it might not do that. I've had double bottom here. It will at least say it wants to go to this high of $7.87. Maybe touch a couple cents more, $8. But I would like to enter it lower. Currently, I can wait, but I'm just saying put these three on the map. That's Fannie Mae, that's Iowa, and Pac B. So hope you learned something. If you did, give me a like. Remember, this is a free game, so hook me up. All right. If you want to learn any more about this, visit the website. We have books available for you. And of course, there's always videos. So I'll see you next week on The Exchange.